we are bringing you one of the industry's latest, most critical leaders. I mean, in 10 years to see what Evolution Mining has done is phenomenal. They started acquiring assets in Australia, built up a really strong portfolio, really focused on operations and where efficiencies could be found. Did a fantastic job driving down their all-in sustaining costs, ramping up their gold production. Q1 of this year, they had record gold production of 161,000 ounces for the first quarter at an all-in sustaining cost of $980, making them one of the lower cost producers in the world. And that's kind of the Jake Klein story. He's the founder of the company. He's the executive chairman as well. And of course, for North American audiences, Jake is becoming more of a known commodity here, which started in 2019 after the Newmont acquisition of Goldcorp. Evolution came in and grabbed the famed Red Lake complex. That's a huge one, super high grade. It was a company builder for Goldcorp and Rob McEwen back in the day. And now it sits in Evolution's portfolio. And then I don't know if they doubled down, but they showed their happiness with that investment by earlier this year acquiring Battle North, right? They got the Battle North for $343 million. So they're continuing to expand there, becoming a really critical player. You're going to be hearing a lot more of Evolution, and you're going to be seeing more of Jake Klein going forward. So we wanted to sit down with Jake and get you all the insights you needed. We had our fantastic editor-in-chief, Trish Saywell, which most of you know, and if you don't, you need to be reading Trish Saywell. It's as good as it gets whenever she starts typing out a story. She sat down with Jake. Now, this one, Jake is in Australia. There's scheduling difficulties, so we did pre-record this one. Everything else today is live. This one's pre-recorded. So sit back and enjoy. Laura, can we fire up Trish's conversation with Jake Klein?
I'd like to introduce Jake Klein, the executive chairman and founder of Evolution Mining. Jake, thank you so much for joining us. We know you're super busy, so we really appreciate it.
Pleasure, Trish. Thanks for having me.
So for our listeners, Jake created Evolution Mining in 2011, and today it operates 5 wholly owned mines, 4 in Australia, and of course, more recently, the Red Lake mine in Canada, which it acquired in late 2019. The deal closed in April 2020, I think. And then more recently in mid-March, Evolution acquired a second Canadian asset with Battle North Gold and its Bateman project, also in the Red Lake district. And prior to setting up Evolution, Jake was in China for many years, building Sino-Gold Mining, which listed on the ASX with a market cap of about 100 million Aussie dollars, and it was sold to Eldorado Gold in 2009 for about 2 billion, I think. Is that correct?
It is correct.
Anyway, you've had an amazing...
There were a few shares issued in between.
Pardon me?
There were a few shares issued in between.
Yes.
2 billion.
So Jake, obviously you've had a phenomenal career so far, and there's a lot to talk about, but I thought I'd first start off with your amazing first half financial results for fiscal 2021, which are they're really great, sorry. You basically banked over 50% of every ounce you produced in terms of EBITDA margin. Your return on equity was something like 18%. Your all-in sustaining costs were under $1,000, and your dividend was, I think, about $247 an ounce, which leads the sector. I mean, that was above Newmont and Barrick and the rest. So if I've left anything out, please fill us in. And what's your secret?
Thanks, Trish. That's a good summary. We hope to be able to repeat it. That's going to be the real secret if we can do that. It's been all about a journey of trying to improve the quality of our assets and focusing mostly on margin and return on capital rather than on volume. So a much more focused strategy on margin over volume. And I think that's the differentiator, that we're not convinced that producing more gold and making the same or less money is better than producing the most profitable ounces. And that's what Evolution's focus has been. And it's, our job as a company is really safely converting ounces in the ground into cash in the bank, and then deciding prudently how best to invest that cash. And if we can't invest it better and get a better return than our shareholders can, we should be giving it back to our shareholders. So very proud of the fact that we've paid 16 consecutive dividends.
Yeah, it's incredible. What's the secret to keeping the all-in sustaining costs so low, though? I mean, I guess a lot of factors go into that.
Keep improving the quality of your asset base. So in the last 5 or 6 years, we've sold 3 assets. That's one way of improving the quality of your portfolio. Get rid of the assets which aren't performing that well and which are higher cost, and keep improving the quality. So buy assets like Cal and Red Lake. The Ernest Henry deal has some copper credits, which has been great in a rising copper price environment. But just focusing on that margin and all-in sustaining cost, not wanting to be the biggest, but wanting to be the best.
Well, that was going to be my next question. I mean, you've always said you don't want to be a gold major necessarily. You want to be the best mid-tier company out there. And it seems like you're heading that way or already there. Why not focus on being a gold major? Why do you want to stay in that mid-tier space?
I just say that I don't think we are the best yet. We're trying to be the best, but we have a way to go still. We're doing well, but we do have a way to go. Look, if you look at the gold industry, we're a bit of a strange industry, as you know. We all produce the same commodity. You can sell whatever you produce on a price that is quoted. And every ounce that you take out of the ground, you're actually reducing the core asset of your company. So when you think about it, what are the ways which you can create a unique gold company, and where do you really create value? Obviously producing that gold at low cost puts more money in the bank, and that's great for everyone. But the real way you can deliver value for shareholders is by finding more gold. So where's the space that discovery can really make a difference? And in our view, that's in the mid-tier space. Mm-hmm. As you get bigger and you get over the kind of 2 million ounce a year production base, you're really in a statistically lower place in terms of your ability to discover something, because you've got to discover one of the mega deposits in the world to make a difference from a discovery perspective. Mm-hmm. So in that mid-tier space, you're producing enough gold so that you can fund your own growth. You're able to pay some back to shareholders, and you're in that place where discovery can really make a difference to the value of the underlying assets and the company. Mm-hmm. And mid-tiers, in our view, are where the best returns to shareholders are made.
Maybe we could turn to the Red Lake acquisition. I mean, it's only been a year really since, well, April 2020 was when the deal kind of closed, right? And you've been dealing with the pandemic on top of that. But what have your successes been there so far? And what's your sort of goal in turning around that asset?
Actually closed on April the 1st, April Fool's Day.
Oh.
But it's been an amazing almost 30 months of owning the assets. The 2 things or 3 things that really Red Lake has delivered to Evolution, which has changed our company and definitely improved the quality of the portfolio. The first thing is it's got a lot of gold. It's got way more gold than we anticipated when we did our due diligence. It is one of the most prospective and well-endowed gold fields in the world. The second thing, and equally important, I think, is it has a motivated, engaged workforce with very highly skilled workforce, very engaged, had lost a little bit of motivation, and the asset was undercapitalized. It hadn't met its budgets for the last 5 years, so it was looking for a refresh, and the workforce has really embraced Evolution's ownership, a group that's prepared to invest in the future of the operation, and it has an inspired workforce at the moment who really want to see and are passionate about seeing Red Lake's success. Mm-hmm. And the third thing, which is equally critical, is in Canada. Canada is one of the great places to mine, and most importantly about that, it has a transparent rule of law system which can be relied on. And that is critically important to miners like us. I go to sleep at night knowing that we're going to own the asset the next morning, and that's not every gold company can do that.
What's your plan for the next 12 to 18 months at Red Lake then?
So we put in place initially our first phase transformation of Red Lake, which was really focused around building up exploration again. It had been underexplored, then getting development in place. It was a mine that was depleting more rapidly than it was putting ounces into reserves. So we're doing that now, and we believe that the first stage of that transformation is 200,000 ounces at less than $1,000 all in sustaining cost. We said that we thought that would take us 3 years, and we're well on track to do that. Then, having looked at the endowment of Red Lake and recalculated resources at 11 million ounces, we now have the view that we should set our sights higher, and our longer term ambition is now 300,000 to 500,000 ounces. And that will really restore Red Lake to being one of the premier Canadian gold mines around again, and restore its place because it was there. So that's the plan. We're very confident we can do that. As I say, it's got gold, a lot of gold. It's got a workforce that wants to make it happen, and it's in a legal framework and structure and regulatory system that allows you to be confident of your ownership.
Right. And then, of course, the second acquisition with Battle North Gold. I mean, you know, there's some people who say you bought that mainly for the second mill, but there is a lot of upside there. You know, the feasibility study that was just done, I think an 8-year mine life, 74,000 ounces of gold a year. I mean, anyway, what's your view on that asset, and why did you buy it?
So we'd actually looked at Battle North a couple of years ago before we acquired Red Lake. Battle North had looked at Red Lake and were the underbidder for Red Lake. So it was clear from both parties' perspective that a consolidation made sense. Their leases are contiguous to our leases. Some of their ore bodies plunge into ground which we own at Red Lake, and it really is consolidating the district into single ownership. So that was the primary motivation. It was only really divided as a result of tenure, not as a result of geology. So it is one geological system. Yes, there is another mill, and we in our aspirational goal of 300,000 to 500,000 ounces need more milling capacity, so that does solve that solution. But really, it's about consolidating the district and creating with that. Our view is that we will be mining gold there in 20 years' time, very profitably.
That's great. Are you going to take a bit of a breather from M&A then? I mean, you've often said that you don't want to buy things just for growth's sake. The best way to grow is organically. So maybe you could talk a little bit about your best organic opportunities in Australia then, at the mines you've got there.
Our best standout opportunity is Cow, where we acquired that mine from Barrick in 2015. At that time, the mining was scheduled to close in 2020, and it was going to process low-grade stockpiles till 2024. It had 1.6 million ounces in reserves. We have mined over 1 million ounces very profitably. It's repaid all of its capital, the purchase price capital, and we now have 3.9 million ounces in reserves due to discovery. I should add that we do our reserves at 1,450 Australian dollars an ounce, which is a very conservative number. We do that purposefully, again, to underpin that margin over volume approach, that we want every ounce that we mine to be very profitable. And if ounces don't make it into that margin approach, leave it in the ground, because if the gold price is going up, they will be profitable at some point in time later. But it's about margin and return on capital. So Cow has a clear pathway from its current about 220,000 ounces of gold production a year to 350,000 ounces, and we're almost at the end of a feasibility study for the underground mine. And Ernest Henry is a mine which we have an economic interest in. It's operated by Glencore. They do a terrific job, but that has real mine life extension opportunity as we continue to drill below the current reserves.
Okay. Would you agree that it's the best time to invest in gold in the last 15 years? I mean, with the incredible amount of fiscal and monetary stimulus that's going on, I mean, you're going to get inflation, but gold's always a store of value. I mean, Bank of America is forecasting $3,000 an ounce gold. Where do you stand on all of this?
Well, it felt better last year when the world seemed to be going really downhill quickly, and gold was going was materially high. In Australian dollars, gold touched $2,800 an ounce, and it's back down to $2,300 an ounce, which is still amazingly high. I think we as gold miners have to really put it in context. When I started my career, gold was $300 an ounce. No one ever thought it would be above $1,800 an ounce. So we need to get sort of some context around that. It is a great time to be a miner. If you look at since 1971, when the US left the gold standard, US national debt has gone up 70 times and the gold price has gone up 50 times. So the gold price longer term, as you correctly say, there's this huge fiscal and monetary stimulus. The long-term trend is upwards. But as a gold producer, you're going to get volatility within that upward trend. And it's our view that as custodians of shareholders' capital, we really need to be focused on that return on capital rather than investing on the basis that the gold price is going up, because shareholders can do that themselves.
Yeah, and you've always said that Evolution wants to be resilient at any gold price. I mean, within, right? So
it has to be, because in the life of a mine, even if you believe that the upward trend is intact, and I think it is, there is volatility. A few months ago, the gold price was $200 or $300 higher. Now it's at $1,800 an ounce. We as an industry have an amazing capacity, in my view, to make life difficult for ourselves.
Exactly.
We reduce the cutoff grade, and that compresses the margin, results in misallocation of capital, and I think it means that investors have been consistently disappointed at the outcomes which gold companies have been able to deliver. If you look at the returns in the gold sector over the last decade, they haven't reflected what the increase in the gold price has been. And that's a bit of an indictment on the gold sector. We need to get better at recognizing that, yes, we're in the gold space, and it is an upwardly trending gold price, but our fundamental job is delivery of returns on capital appropriate for the risk that we're taking. That depends on jurisdiction, it depends on geology, but we need to get more disciplined on delivering returns on capital.
Yeah, absolutely. Can you talk about copper a little bit? I think it's about 15% of your revenue. Are you thinking at all about doing some pure play copper stuff, or you're happy where you are?
We're happy where we are. I mean, I think, again, it goes to what investors want. They're investing in Evolution as a gold company. A rule of thumb would say that up to 20% of copper revenue would be okay. If we happen to discover a major copper deposit, that would be good. We wouldn't say no to that. But we're not out there actively looking for copper plays.
Yeah, I mean, but copper's role in sort of the whole decarbonization future that we're looking at. I mean, and you I think it breached $10,000 a ton last week. I mean, copper's hot.
It is, and if you believe that we're in a cyclical industry, you shouldn't be buying when it's hot. You should be buying when it's cooler. And again, that kind of goes to our philosophy around, middle of last year, we were thinking that the gold price was hot and opportunities were overpriced. A bit of headwinds into the gold price. People are feeling a little bit more uncertain. Well, maybe that's where there's more opportunity. When you're buying when a market's red hot like copper at the moment, you're kind of hoping a lot that either you've seen something that the market's not seeing, or that the price is going to go even higher.
I wanted to take you back to your years in China for a moment, if you will. So you're probably one of the best placed CEOs to talk about sort of the geopolitical tensions we're seeing with US-China relations, Australia-China relations, and the impact that's having on the sector as a whole. What are your thoughts on where those relationships will be in the next year or two? And
I think we're entering a really challenging time. Again, if you put it in context and you went back 20 or 30 years, there was a general assumption by Western liberal democracies that as economic prosperity came to China and it globalized more, then political change would occur. And that's why I think there was a general sentiment that the concessions and overlooking some of China's transgressions with respect to IP and various things were worth it, because at the end of the day, a globalized and engaged China was a great outcome to have. And if you reflect on it in a kind of sober and reflective perspective, that hasn't occurred in terms of the political change. Today, the Chinese Communist Party is probably stronger than it has ever been. And that assumption hasn't been right. So you're starting to see definitely an increased level of recognition of that. I think last night I saw the Secretary of State of the US starting to use much more aggressive language with respect to China. It hasn't, that competitive confrontational tone hasn't changed since the presidency changed. In fact, probably you could say it's escalated. So from a political perspective, it looks like we're into a very competitive framework going forward. Hopefully that doesn't lead to anything catastrophic, but there is a higher risk of that. When you say, what does it mean for a country like Australia and a commodity like gold in terms of companies? China has recognized that it is short of raw materials, and it suited China to buy those raw materials from countries like Canada and Australia for a long period of time, particularly Australian iron ore. And it's been an underpinning economic prosperity of Australia for the last 20 years. At the same time, I am of the view that China has been executing a very premeditated strategy that it needs to diversify its sources of and access to those materials, and has been aggressively pursuing developing countries with debt diplomacy. It owns 20% of the debt in Africa, particularly the resource-rich countries. It's transformed its own metals and mining companies into formidable competitors. Zijin Mining is now the second or third largest gold company in the world. So I think it sees its next focus, or the next generation of opportunities and access to materials, as being largely in developed countries where it has much more diplomatic influence, and its companies are very competitive. And that's going to mean it's going to be more difficult for companies who rely on Western capital providers.
For sure. Interesting. Okay. Also, just a trend that we're seeing is more secondary listings, either on the LSE or on the TSX. But you've often said in the past that you don't see the value in a secondary listing necessarily, because it doesn't result in extra liquidity. And just what are your thoughts on maybe a secondary listing for Evolution?
I still think it's difficult. It adds a lot of complexity to the company. I have been involved as a non-executive director in a company that had a Toronto listing and an Australian listing, and the additional compliance with regard to 43101s and JORC compliance makes it onerous. So unless you get to a scale where it really is warranted, I'm not sure that the benefits outweigh the costs and the additional compliance needs.
Oh, I wasn't sure, because with the acquisitions in Canada you've made, I thought maybe a listing on the TSX would make sense.
Well, maybe if we keep growing in Canada, we'll move our primary listing to Canada.
Okay, well, I'll just maybe close with, you've been in this industry for a long time, and a lot of our viewers are young people just starting out. Are there any sort of tips you can give them, lessons that you wish you had learned earlier or had learned about before you got into the business, that you could share with them? Any cautionary tales?
It's an amazing industry. I never started out thinking I'd be in the mining industry. I'm an accountant originally, a long time ago. And it's taken me to places where I couldn't have thought of going, and wouldn't have, I'd pay money to go there on holiday. But probably the industry is best described to me by a saying I learned in China, or heard in China, which is sweet torture. That is what this industry is going to deliver to you. And therefore humility is a very important part of this, of being in this sector. just when you think everything is going right, things go wrong. So resilience is really critically important. Making sure you're humble about your successes, because at some point in time, something's going to go wrong, which you didn't anticipate. And making sure you really are always scanning the horizon for both opportunity and for challenges. But at the end of the day, this is an industry where, in my view, sort of opportunity doesn't come gift wrapped. You have to go out on the ledge and figure out a way to jump off the ledge, whether it's in your own personal career where you're needing to move into another space, but challenge yourself. Always a company, when you're sitting around a board table and you're thinking about an acquisition, there are always more reasons why not to do something than why to do something. Mm-hmm. And at Evolution and my personal value system, define your values. We're very focused on that at Evolution. Don't go across them, and don't breach them. Don't damage your reputation ever. But at the end of the day, you have to take risk. And this is a business about geological and financial risk, and you need to get comfortable taking that.
Yeah. Okay, well, thank you so much, Jake. I think we have some questions that came in for you. So I'll turn it over to Laura.
Yes, we do, actually. The first one is, from an industry perspective, what lessons needed to be learned out of the last bull market?
I think I've covered that. So just when you think everything's going too well, it probably is. And make sure you're ready for that rainy day and some of the headwinds. If you go back even in 2020, everyone is talking about the gold price going to the sky. 6 months later, all these other commodities are hot. Copper's red hot. Make sure that you're building a business that is resilient to it and not dependent on the gold price going up. And what's at the risk of repeating myself, make sure that when you're investing capital, you're treating it as your own. It is your shareholders' money, and we're only custodians of that money. And make sure you're really getting a return which is commensurate with the risk you're taking, rather than on the hope that the gold price is going to go up.
Sure.
Perfect. We have another question here as well. It is, what is it about the gold sector that leads to a mentality of growth at all cost, as opposed to running a sound business?
We have an unconscious bias that we always believe the gold price is going up. And when the gold price is going up, it's fun. Investors are throwing money at us, and the party's on. And then when the gold price goes down, those same investors kind of go, well, what have you done with our money? And generally, we end up having wasted it. So this unconscious bias and belief that it's all going to be okay because the gold price is going to go up is not the right approach, and we need to get rid of that bias and all really start to think about what is the right returns on capital that you're going to get, that you need to take that risk, and what is a gold price that you're going to be making money at, irrespective of what's the gold price that you should be making that investment on, not on the basis that the gold price is going up.
For sure. Laura, are there any others?
Well, actually, Jake, if you don't mind, maybe Trish and I together can deliver on this too. We sometimes do this really fun game with some of our CEOs. And what we will do is just state something to you, and you can tell us if you're bullish or bearish on them. And if you'd like to expand on it, you can, but if not, bullish or bearish, you can just respond back with. Sure. So the first one is the US dollar.
Bearish. Can't print this amount of money without getting a deterioration in currency.
Yeah. US bonds.
Bullish on that. I think it's printing that amount of money is going to lead to inflation, which is going to lead to higher interest rates.
Mm-hmm. China as the world's imminent superpower.
Bearish. That's going to create challenges which we haven't confronted in our generation, if in terms of confrontation.
Mm-hmm. And And the last one is, I think we also addressed this earlier, but it's still good to hear your viewpoints. Average gold price north of 2,500 US for 2022.
Can I have a bet each way on that one? And so
Sure.
but that's an investor's job to take that view. But yeah, it could get to that level. We're not going to run evolution on the basis that it will get to that level, but it could. You cannot have this amount of fiscal and monetary stimulus without creating inflation, which will get people back into storers of value like gold.
Oh, that's great. Thank you, Jake. And yeah, those are the questions for now. So Trish, I'm going to turn it back over to you.
Okay, Jake, do you have a few more minutes or do you have to go?
Yeah.
Okay, well, I was just going to ask you, I didn't ask you this because I hadn't sent it to you ahead of time, but I was reading about your first asset and everybody told you that it wasn't feasible, and then you sort of proved them all wrong. We didn't really talk much about sort of how evolution started and progressed to all the assets you have in Australia. So I don't know if you want to give a quick overview of that before we let
Yeah, I mean, we started with a shell company with a bit of money and an asset which had a failed feasibility study. It was this Mount Carlton asset, and they just announced that the feasibility study meant that it wasn't economic. Fortunately, I met someone actually in the street whilst I was walking down Sydney, and he said, there was a stockbroker said, "Why don't you have a look at this?" And the key to unlocking value at that asset was to produce a concentrate and not try and produce gold on site. And then we could sell that concentrate to China. So we got involved in that company. We took over the management and they were very receptive to that. The first port of call was to one of my colleagues who'd actually run a bacterial oxidation smelter in China for Sino Gold. And the metallurgist who used to operate our gold mine, which produced a concentrate, and we'd done the same thing. So we were able to reduce the capital enormously without needing to produce doré on site and ship a concentrate to China, which we've done for the last 8 years. And that kind of got us into business. And then we realized we needed to produce some gold, so we went out and did a hostile takeover of a small asset. Pajingo, and that then, I guess, made us a producer because we're constructing this Mount Carlton asset. Then I approached Newcrest, who just bought Lihir, and said, well, you've got these two other assets in Queensland, Mount Rawdon and Krakow. Why don't you put that into Evolution rather? And that would create more value. And they were receptive to that, but there was a 30% shareholder of Krakow. And they said, well, you better go and speak to them. And that was what set up Evolution as a three-way merger, effectively, or Newcrest put in those two assets, and there were two companies that merged. So November 2011, we created Evolution. There is only two of the assets that remain in the portfolio from that original formation. 2015, we did a deal with La Mancha, which is Naguib Sawiris, that gave us both access to capital, and he was incredibly supportive in investing in our future, and the Mungari asset in Western Australia. We then were able to buy Cal in 2015. It was more than our market capitalization at the time, so we talked about risk and opportunity and stepping over the edge. That required our board to definitely step over the edge, but it's proved to be a cornerstone asset. Then we did a deal with Glencore in 2016 when the copper price was not hot and commodities were not hot, and Glencore were needing to deleverage. And this was a deal which gave us access to some of their gold, and it worked out well for them and worked out well for us, and allowed them to deleverage and gave us the exposure to gold and some copper. And then Red Lake, we acquired last year, and Battle North will be our next acquisition. So it's all about changing the portfolio. We've sold 3 assets. We've sold Edna May, we've sold Krakow, and we've sold Pajingo as well. So it's about improving the quality of our portfolio and continually looking to upgrade that portfolio. So that's a quick snapshot of the first 10 years of Evolution. The next 10 years are going to be even more exciting.
That's great. Well, thank you so much, Jake. Really appreciate you spending the time with us today.
Thanks, Trish. Really
Okay.
appreciate you having me. Thanks.
All right.